November 12th, 2024. Nasdaq futures December contract. This is another trade recap taken earlier today, New York AM session. It's actually the second trade taken today. The first trade was on gold futures. Let's just jump right into it. Again, start by this blue dotted line. That's the line indicating the 9:30 New York open. Not much happening here. Price trades down and then trades up, goes up to here, goes inside this very wide 15-minute SIBI, also taps again into the new week open gap of this week. Buy side liquidity sweep right over here. Post buy side liquidity sweep, price displaces down, forms or creates a market structure shift. Trades a little bit down, taps into a 15-minute BISI, indicated over here. Let me bring it over this side. After this market structure shift, there's this fair value gap. One-minute SIBI, and there's another one right up over here, and we also have an inversion fair value gap right over here. Our entry was at the low of this fair value gap. Price immediately goes into drawdown. It taps into it and it keeps going, disrespecting this other fair value gap right over here, bearish fair value gap. But what does price seek? It seeks this tiny volume imbalance, which is the gap between this candle's open and this candle's close, indicated here as a volume imbalance. You see how taps in it once, twice, respects it perfectly, closes outside or below it in both times, in both attempts. Also takes out minor buy side liquidity resting above these highs. The minute that has happened, price starts to trade down. Our entry was here, like I said. We were in drawdown for quite some time, but eventually price trades down, forms this fair value gap after this new displacement over here, and then trades back into this fair value gap, and then boom, starts to trade lower. You see, I kept this fair value gap here, the 15-minute. Why? Is because I want to show you how price reacts when it hits these fair value gaps, whether it's a 15-minute fair value gap up here or this fair value gap. In general, 15-minute fair value gaps, price normally reacts to it. And before, whether it bounces back up or bounces down, or breaks and retests it as point of interest. Price trades back down, trades down here, goes back up. What does it seek? It seeks this bearish order block, which is the open of this up close candle. Respects it nicely, tests it 3 times, closes below it, trades back down, and then hovers around up and down above and below this 15-minute fair value gap before price eventually plunges and takes out, hits our take profit. Our take profit, why is our take profit here? Because this is the 15-minute BISI, and it's also below the sell side liquidity, resting below the fifth on a higher time frame low, which is here. These relatively equal lows, which happen to be above this 15-minute BISI and within this other 15-minute BISI. That's why I kept this 15-minute BISI right over here, also to show you how price has reacted when it hit this 15-minute. Once here, goes back up, again comes back down here, breaks through it, retests it as a point of interest, and then trades down. Our take profit was hit over here, and then price wide here, because if those of you who haven't seen my videos before, I use the 15-minute fair value gaps, bearish and bullish, as points of interest. If I enter at a 15-minute SIBI, my take profit would probably always be at a 15-minute BISI and vice versa. Obviously, this is combined with other factors or confluences like sell side liquidity and buy side liquidity resting above the highs or below the lows. So basically, this was our trade for today. As you can see, 48 points. It's about, I think, around 609 or 960 dollars in total. I hope you find this useful. Please consider subscribing, liking, and follow for more videos like this. Till next time, take care.